Boom! What's going on, guys? Welcome into Energy Newsbeat here on this gorgeous January 7th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher, the world's greatest website, EnergyNewsbeat.com. Stuart Turley, how you doing today?
It's a beautiful day in the neighborhood, and we got a stacked show, dude.
We do have a stack show today. You can check out what we're going to cover on the rundown here. But first, guys, before we dive into the equities markets, just subscribe to this YouTube channel. If I was a crazy 15-year-old YouTube streamer, I would scream, smash that like button. But I won't, so I will spare you from that. Also, go ahead and check out us on the world's greatest website, EnergyNewsbeat.com. I'm telling you guys, it's going to be the place. It's not quite there yet now. We're building it, but it is going to be the go-to place for everything energy use, not just oil and gas, not just renewables, but the entire energy system. We're bringing it all together, as Stu likes to say, total digital integration. Total energy integration with this website. I'm so excited to be checking out every day for updates. You know, on the equity side, if I would have told you the U.S. Capitol was invaded, you would have told me the stock market would crash 5 to 10 percentage points. But guess what, Stu? 1.5 percentage points on the upside for SPY. Nasdaq was up 2.5 percentage points, 3/4 of a percentage point for Dow Jones, now above 31,000, all hitting fresh all-time highs. I don't know where the champagne is, but we should be popping it. It feels weird to even say that because of kind of the state of what we're all in, but markets seem to have no issue with what's going on politically, which is pretty unbelievable. There was also a sentiment in terms of numbers. Supply management for non-manufacturing activity came out at 57.2 in December, which that was a rise from 55.9. To give you guys an idea, Dow Jones was expecting a print of about 54.5. So, I mean, that's about a 3-tick increase in U.S. non-manufacturing index. That's a big that gets swept under the rug when you talk about what's going on right now. But that's a very good bullish sign for the economy, and it's definitely what propped up. What I found very interesting was the fact that tech stocks up 2.45 percentage points. All I've been hearing for the past 2 days is how someone's going to come in and regulate Facebook and Netflix now that there's this supposed blue wave coming in starting January 20th. So it's pretty crazy right now. In terms of equities, don't be short. That's the only advice I give you. Do not be short, regardless of how you feel the fundamentals are, because sometimes you don't trade the fundamentals, you trade the technicals. All right, crude oil, 3/4 of a percentage point on the upside, dancing around that $51 mark, currently trading about 50.94. We settled at about 50.83. So I'm talking about a settlement number of that. That's really good. Back into the curve, still in contango here, 49.29. That's only 0.4 of an increase. Natural gas, $2.68, losing 1.5% today. Can't say I'm too surprised. Back into the curve, 1.3 percentage points down to $2.88. This just comes off, again, the whole month of December is supposed to be warm. What we saw the last 2 days was a slightly short-term cold front coming in. Well, I'm looking out my window right now, Stu. I've got light coming in that's messing up the shot. Really nice here in Denver, and that's where kind of the Midwest, that's where that cold front was. So not quite what they're expecting. That's where we saw a little bit of drop in natural gas prices today. XOP had itself a nice day up at 2.8 percentage points. Energy equities love that. They're up to 67.08. Nothing like $50 oil solves a lot of cash flow issues for these companies. OIH up to 177. That's about a 1.3% increase, or about $2 on that index. We did have some companies on the downside today. Console Coal down 4 percentage points. Camber Energy down 4 percentage points. Prime Energy Resources, an offshore player, they were down 7 percentage points. Big numbers on the upside. Amplify Energy Corporation, they're up 10 percentage points. SM, They love themselves some $50 oil. They were up 8 percentage points. Our friends over at Ring Energy, a conventional player down there in the Permian, 91 cents. They're up 12 percentage points. Consol Energy up 13 percentage points. America Resources Corporation, who would have guessed that? Up 16 percentage points. That's just irony. That's just an ironic stock trade, I think. They're up to $2.15. And CDEV, talk about mostly dead, back from the brink of death all the way up to $2.03. That's a 30 cents increase, or about 18 percentage points. Stu, what do we have in the national news desk today?
Oh, we have a lot. Miracle Max couldn't bring them back, huh?
Not
Okay.
quite.
Yesterday we had do what?
No, not quite. He didn't.
No, he's not quite dead yet.
ready.
You bet. Hey, The bottom line yesterday, I got a note from Geopolitical Futures, good people over there. They sent a note out saying yesterday with Kazakhstan, the dispute is basically over, but won't be forgotten. It's going to get worse. Heard it here second. So the report we ran yesterday, they sent a note over. So they love us. Hey, BP is having some issues. You and I talked about this a second ago.
Yeah.
I want your opinion on this. BP originally agreed to sell its interest in the fields in the Andrew area of the Shearwater field for $625 million. They now later agreed to restructure the deal for its cash value of $210. Where do you think this is going to play out, Michael?
Well, I think there's a couple things. One, investigative research on Twitter lends me to find that apparently the North Sea has very high infrastructure and OPEX costs due to the fact that it was set up to operate at high volumes. And right now the North Sea is not quite operating at high volumes.
No.
Now, that being said, if you can get it for $200 million, that's a steal. I mean, I keep thinking too, if Concho was still a public company, what would their valuation be today?
Right.
So it's the opportunity cost. Economists like me like to always talk about that. What's the opportunity cost? But I think they'll get somewhere between 300 to 400 million, probably on that higher range.
Yep.
It'll be interesting. I mean, I think, they don't have any timetable set, so they're really going to hold out for the best bid. But it sounds like the North Sea, at least in 5 years, is going to be fairly, not bleak, but the outlook doesn't look terribly good. Low declining volumes. I'm looking at them right now. Yeah, I mean, for BP, the question is, the joke I saw was, are they even going to exist in 5 years? I don't know. But
they're definitely not going to exist as they are today.
Yes,
they are
and that's definitely key.
They are rolling out. Hey, got another one here from OPEC Plus. All of our stories that we ran on OPEC. This is from our friends over at Rystad over in Norway. Some really good pieces in this one here. The decision, but I got to hand it to the Saudi Arabia Prince, the negotiations under OPEC Plus. Saudi Arabia hit it out of the park for our West Texas WTI folks and drillers and everything else. Unbelievable sacrifice. I believe it was 400 million barrels per day that Saudi gave up. Russia and
it's 1 million barrel a day.
Excuse me?
1 million barrel a day.
1 million, but they reduced it down. Anyway, what's a million between friends on barrels per oil? So all that's tying into Rystad's information, and 60% Espen Erlings, head of upstream research, is saying it is now coming around to coming back in because of this pricing, because of the Arab sacrifice, Saudi Arabia sacrifice.
Yeah, and
big stuff with them.
No, it is great stuff with Rystad, and I'll take a counterpoint to you a little bit. I don't think MBS, when he sits down and thinks about whether he wants to reduce output, is thinking about West Texas at all. I think in an ideal world, they want to see the U.S. shale industry be absolutely destroyed and everybody in Midland out of a job. What I do think they're looking at is how do we support oil prices to the point where OPEC has to make money at some point. They've got bills to pay. And Remember, they're operating as a country, not as an industry. So everything they do is tied into everything else they do in the economy.
Well, here's the gotcha side on that one, Michael, and that is the fact that OPEC Plus, this was with the Russia minister and the Saudi minister. They extended that thing out. We followed on Twitter. We were all sitting on the edge of our feet, on the edge of our seat, not feet. And we were sitting there. They were delayed, and Russia wanted to increase theirs by 500 million barrels per day. And they ended up only increasing 75 million barrels per day. And then Kazakhstan got 75.
It's like any negotiation. You start out at what you really want. You get undercut and you find a middle ground. We did that today, Stu.
You bet. We gotta love it, man. You are a negotiator. I love it. Outstanding. Hey, last one here before you throw me off the set. BlackRock.
This is a wild story. This is one of the. This dropped after we should have run this yesterday, but it dropped after we recorded the show. Unbelievable, okay. Stu.
Michael, You and I started out our show almost a year ago, and we said, "What's a few billion between friends?" Now, with all the stimulus money going around the world, what's our new slogan?
Wait, what's a few trillion between friends, according to
Oh,
BlackRock?
oh yeah. BlackRock came out, and they now are leading a 120 trillion investment boom that is upending Wall Street. This is a worldwide phenomenon that is going nuts. I got a couple nuggets in here for you. It is a long, hairy report. Go check it out on energynewsbeat.com.
The
They,
world's greatest website.
the world's greatest website, they currently have 7 trillion under their management at BlackRock. Holy cow. Within a year, 77% of institutional investors have said they will stop investing in companies that aren't considered sustainable. What?
Whew.
In that is Tesla. I've been watching Enphase for a long time on our portfolios. And then it comes back to a question they're asking: what do institutional investors want? They want big money in this new segment involving sustainability. The CEO of BlackRock says we are on the edge of a fundamental reshaping of finance. Anyway, I thought all that was good. Here's another Enphase. We are not a investor. We don't have our license, but for fun, I've been following Enphase for a long time. Got some good numbers on them, and also right here, in NVIDIA Corporation had them a long time as well too. Excellent article from the boys over at BlackRock.
Yeah,
So
I
that's
mean, I
all I got
think
for you.
it's going to become very. There's a huge, and I've been saying this privately now for over a year, so I don't necessarily feel like saying it quote unquote publicly now is that big of a deal. There's a huge opportunity to come in and provide ESG sound, documentable reporting, and it's if BlackRock is going to invest 120 trillion dollars, and one of the core tenets of that is sustainability. How do we track that? And right now there are no good options for that. So I know,
Right.
it's something that's been on my mind for over a year. So I trust, it's I there it's a definite industry. I think that's right, but it's gonna be very interesting to see how BlackRock rolls out as we move over into the U.S. energy side. Couple things here. First, we came out. U.S. oil exports fell. Total for the first time in a couple months, which is really good. The key was they fell from China, but China, if you look at their data, is also increasing their production. So it just says, where are they buying from? This is where Russian wants, this is where when we talk about Russia wanting to supply more oil, well, they've now got a buyer in China who's buying more from them than they are from U.S. If you look at the numbers, China's stopped buying. They're buying more now from other people. They're not buying overall less from us. So it's very interesting.
You just We just ran a story on that, Michael.
I know. I'm looking at it right now. That's
Yeah,
what I'm referencing. It's
cool.
about 2.3773 million barrels in November, which was down from about 2.91 million barrels, according to the U.S. Census Bureau. Sidebar: the U.S. Census Bureau. Woo, woo. Oh, we could have a whole podcast on that. I love their data. So just go look at the margin of error on some of the data there, and you'll fall out of your chair. You'll have a heart attack. India took over as the top destination for U.S. crude, which I thought was really fascinating, and it'd be interesting to see how long they hold that streak. The other thing is, along that natural gas note, we did see natural gas stocks today. I told you it was about a 1% drop in natural gas prices. Shook off the fact that we had a 130 billion cubic feet draw from Cushing from natural gas stocks. Which is in line with what we should be seeing. Winter is draw. We should be seeing numbers like this. So it's very interesting to see the market. Not interesting, it's expected. The market's not going to react when something comes in line. The other story I found hilarious, and this is an EIA report, Stu, that you ran. I hate to keep beating a dead horse. I think this horse is dead, and this might be the time when we lay this horse in the ground and finally bury it. But
Oh no,
EIA runs a story.
you are
What was
not
it?
going to bury it. No way.
It's been 6 months. I heard this natural gas is never going to be more valuable. 350, 450, dare I say $5. EIA runs a report today. Headline: In 2020, U.S. natural gas prices were the lowest in decades. I can't even make. Oh, it just cracks me up. In 2020, natural gas spot prices 205 BTUs, the lowest price in decades. I'm sorry, Stu.
I am so, man. I've got a couple numbers on you, dude, and
You
I was
do?
right. 320 one day.
You
I
had
got
it.
one day right.
You were the closest guy because you called 320 gasoline.
Nat
And
gas.
it really wasn't. It got there one day. It fell. This just cracks me up. I think I'm burying this horse. Probably not. I'll bring it up.
No,
more.
you're not. No, you
but
are
this
not.
just cracks me up. If there was a nail in the coffin of people saying natural gas prices, I wonder what CNX now selling their resource. I wonder what they're feeling like right now. But very interesting. The other story that's on Energy Newsbeat right now that actually Stu ran yesterday that I found really interesting is that there are changes coming to the renewable and carbon capture tax credits that come on the Consolidated Appropriations Act. This is again a story that Stu ran. Give you guys an idea. ITC stands for Investment Tax Credit. So to give you guys an idea, your solar ITC percentage, as long as you can begin construction before January 1st, 2023, 26% you get is back as an investment tax credit. January 1st, 2024, it goes to 22%. And then after 2024, it's 10%. And then if it's placed in service on or after January 1st, 2026, it's an ongoing 10%. So, I mean, if you want to know why solar projects keep popping up, it's things like that.
You bet.
Yeah. I keep thinking of that meme. I'm looking at the meme right now on our website. Why, yes, I did get my renewable energy tax credit. Couldn't have done it without government assistance, courtesy of Jack Nicklaus over there. We missed anything today, Stu?
No, it's been a crazy day. Got more crazy things coming on, and we got a fantastic week coming up.
Oh, it's only going to get crazy, guys. We appreciate you checking us out, and we're going to go and let you guys get out of here. Get back to work. Thank you for checking us out. World's greatest website, EnergyNewsBeat.com. For Stuart Turley, I'm Michael Dent. We will see you guys tomorrow on the Energy Beat.